So you just started trading and you want to know what is the best style of trading. You've heard of intraday trading, scalping, swing trading, and even investing. What are all those terms and what is the best for you? In this video, I'm going to tell you exactly what time frame should you use and why. And I hope this will help you to find the best trading style that fits you and your personality. So here we are on the Dogecoin, and the Dogecoin is one of those cryptos that have insane weekly charts. So that's why I want to talk about investment at first. That's when you go on the weekly, monthly charts, even sometimes daily, but I would say weekly is mainly what investors do. And basically what you want to do when you're investing is to only look at the higher time frames and not really worry about anything else. So the idea is to do very simple analysis. When you say it's flat, you buy. When you say it's like parabolic, you sell. I think if you already would like to sell here, it would be quite good. So that's investing. You can also do some primary analysis of trend, for example. You would just use your trend lines like this to see when the market is likely to stop going in the downtrend. So here we've broken this downtrend on Dogecoin, and you can even try to extend it like this, but after this, we are no longer going down and we have found some support here. There was a bit of up and down, but we seem to have found support, and that's how you would analyze very basically the charts. You just draw your box of support here, you wait for the breakout, and then you buy. You put your stop loss in there at the bottom of this support or even at this swing low, and you can target the next highs. So the difference between this and trading is that you will have to wait months and years even sometimes. Like, for example, for me, I started buying Dogecoin again somewhere around here when I saw that it was finding some support, and I bought a bit all the way here while it's very flat. So you don't know exactly when it's going to break, and that's something that's very passive. You don't have to worry about it. So if you're someone really busy but you still want to do some kind of technical analysis, this is a good thing. The difference also is that it's very linked to fundamentals. You can't just buy a project that has no upside, even if the chart looks good. If the company is really garbage, it's not going to go up. So that's also something with investing. You probably need to not look only at the charts, but probably also analyze what is the project, what is the company doing. So that's the first style of trading. And in some investments, very risky, like Dogecoin, you also accept that your stop loss might be zero, meaning that you can just lose all your money. You don't put too much because you know it's very risky and volatile. So the first style of trading is this. Now let's go to what is called swing trading. And in this style, you can potentially hold trades for days or even weeks, sometimes months, if you go on the daily charts. But for example, if we would be a swing trader on the daily chart of Dogecoin, we would probably still wait before we take a trade. And you can also draw your support in weekly. It's just that instead of putting the stop loss to zero, we would wait for the breakout of this zone, for example, which I believe is possible to happen soon. And we would maybe not put the stop loss all the way to there, but be a bit more aggressive and put it here and have a 2.1 or 2.5 reward risk to reward ratio. And in that way, you just secure your trade and you wait to see what the rest of the price does. So typically in swing trading, you will also take different types of profits. So you will, for example, secure the position once you reach this area that you see there's been some rejections. You just maybe take some money off the table, move your stop loss a bit closer. And then when you see here, for example, when you arrive at 2, you just move the stop loss to break even. So this is a risk-free trade. And you keep on trailing like this. If the price goes up, then you look to the right, you look to the left, and you just target the next area. Okay, now we can try to go all the way to here and then to here. So this is typically a style of trading that is also requiring you to have very good psychology, because it's very hard to hold trades for a long time and not be caught up in all the up and downs that happen every day. So this is definitely a style of trading that will require you to see less charts every day. You can just have a quick look, see how your trade is doing, do some analysis, and then you just put an alarm, set it, and forget it. You don't need to be 24/7 on the charts. And actually, I wouldn't recommend this even for intraday trading as well. And you have the bit of in between with the swing trading, which is the 4 hour. And in this one, it would technically be a trade that could last for a week or 2 weeks at most, because you have slower charts, but still the movements happen quicker. For example, here it would be a trade that you would see you take at the break of this small support, and you would also just target here. So as you can see, it would take, for example, from 23rd October to almost now, so that's about like 2 weeks or 3 weeks to reach your target. And that's the same idea that you don't want to be all the time in the charts. So this style of trading, swing trading, fits for people who don't have a lot of time to spend on trading, who also don't want to just be stuck in front of their computer. That's something really important and really nice to use. So now let's move on to intraday trading, which is typically on the 1 hour or 15 minutes time frame. So it's sometimes used in pair with the 4 hours. You usually will just go to the 4 hours, mark your areas of support and resistance, but then you go take your signals on the 1 hour or the 15 minutes. And as you can see, it's already much faster. And typically what you want to do is to not hold positions for much longer than a day. So you would basically enter here at 10. When you see this break, you just put the very tight stop loss here, not something all the way to there, or you could potentially, but typically you will be more aggressive because that way your trade will also resolve quicker, and you will just target a 2 risk to reward ratio. And with that, for example, here, you would see that, okay, it just spends the night and then 1 day before it reaches your target. So that's intraday trading. Normally, you would go even a bit faster with the 15-minute time frame, and there it's even quicker to reach. So you would, for example, enter the trade in the morning somewhere. Let's see. Let's say you enter your trade here on this little retest, and you target the resistance, and that's just like at the end of the next day you would get something. So the good thing about this is that you get the results quicker of your trades, and you don't need to wait so much. It's just that you need to also be a bit more cautious about when you enter, because the price moves down, especially on the 15-minute time frame. You have to be a bit quick and make your decisions faster, because if you see that there's a setup here, it can just go up, and then you don't have a very good risk to reward ratio. So that's something to keep in mind when you want to enter. You have to be ready and quick in making decisions. Well, on the swing trading, you have really days even to make your decisions before you can see, because on the 4-hour time frame, you get like 1 candle every 4 hours. That's really plenty of time to decide whether or not you should take this trade. Now, if you're even more impatient and you have more time to be intensely in front of your computer, you can try scalping. And scalping also requires you to be even more focused than the rest of the trading, because the signals are so quick. It's moving really fast. Let's just see here. We're just going on the live. Here we're live, and we see that it's moving every 5 minutes. This is a candle, so you have a lot of movement. for example, here you're trying to enter, the next minute the price is already there. So if you would enter here with this stop loss, then you get, for example, your 2-to risk reward is right here. But if you go 5 minutes later, then you have a really, really bad risk to reward, and you shouldn't take this trade, or then you have to get a much higher target. So that's something to keep in mind. It's really quick, and if you go in the 1 minute, as we can see here, then the price, just every candle is 1 minute. This moves crazy quick. And the difference also is that there's a lot more fake outs and a lot more of consolidation happening between the trends in the 1 minute. It's chaos, basically. And 5 minutes is a bit similar. It's very tricky to trade, basically. So you really have to know what you're doing. You have to have a strategy in place that you have back tested on this specific time frame and on each asset that you're trading, because otherwise you will just get wigged out and all the time like get into trouble. Because, for example, here we are in an uptrend, but you can see there's just such a sharp move down before we just resume the uptrend calmly, and again we just go quickly down, sweep everyone, and keep going up. So this is very chaotic. While if you see on the 4 hours, for example, the trend is much clearer. You have one leg up, retracement, one leg up, retracement, bit of consolidation, double bottom, and go up. It's very straightforward. Like, it doesn't go like this, go back down and go up. It's much more easy to read, to my opinion. It's just you need to spend a lot of time. So why would you do scalping? Well, because you get potentially much more opportunities of trading. And for example, for me, I'm quite busy during the day, so I don't have a lot of time to trade. And what I typically do is I just take 1 hour and a half in the morning to trade. And if I want to have some signals, I like to just be on the 1 minute, and that way I get enough signals that I can trade properly. But I don't have to stay all day long on the chart. So that's quite nice. I could also do swing trading, actually, but I like the action. I like to be in front of the computer, look at the chart, and see what it's doing in real time. But if that's not for you, if you're getting anxious just looking at your trades, maybe swing trading will be more of a quiet thing. And for scalping, especially, I recommend that you just set it and don't touch it, because the price goes up and down so many times that it's very easy to get emotional and mess up with your trade. So you just see, okay, I have my trade up there, I'm just trying it, boom, and I'll see what happens. If it goes to the target, great. If not, that's okay. I'm just leaving, because otherwise you're going to mess it up. So I hope this was helpful for you to figure out what type of training do you need. For beginners, I recommend to start at least with something higher than the 15 minutes, because first of all, you will need time to calculate the position size you need to put your order. And also it's a bit easier to read and a bit cleaner charts. So that's definitely why I would recommend this for beginners. Now, if you want some action, feel free to try the scalping. So I hope this was helpful and that you figure out, thanks to this video, what style fits you most. And if you have any questions or comments, just feel free to share them. And don't forget to subscribe if you liked the video. Put a like, it really helps a ton. And I'll see you in the next one.